Yes, sir. Very happy evening to all. I believe that your preparations for the coming Jan examination is going very well. This video is for the group 1 students who are going to write in this Jan. Sir, as I committed to you, the first thing this time, this Jan for the South Indian students, we are doing 25 questions from computation of total income. That we will be uploading in 5 parts. First part comprises of 5 questions. Question number 1, 2, 3, 4 and 5. We have already shared the PDF to you. I think many have started working on the questions also. In that 5 question, if you are having any particular doubts, the explanation I am uploading along with today's video, my dear lovable students. And many are asking, sir, is any marathon available for the coming Jan examination? Actually, since I am mainly or fully focusing the face-to-face classes for the time being, I am very short of time. But if you are not prepared residential status and scope of total income, this is a 10 mark expected area for exam. By spending a very short span of time, you can prepare these two topics. And if you are having any doubts in PGBP, that is a questions of ICI, sir, we have done one PGBP question marathon. And if you want to study chapter 6A, any particular leg like ATC series or D series or E series or G series or income based series, I am having a particular video on chapter 6A. And TDS and TCS, the full coverage is there. And every video, for your easy reference, we have created a playlist, my dear lovable students. This is direct tax, sir, heads of income, PGBP, direct tax, residential status, part 1 and part 2. If you are able to spend a 2.5 hours of time, I can assure you that, my dear lovable students, you can score the 10 mark. If you have not prepared for the coming exam, don't leave it, because that is a 10 mark hot area for exam. And chapter 6A reduction, without knowing chapter 6A, you can't do the computation of total income. And you should have a proper knowledge in chapter 6A, because now questions are asking to put under both the root, default tax regime and also under the optional tax regime. So if you are able to spend a 6 hours of your time, then you can have a crystal clear clarity on the chapter 6A reduction. TDS and TCS, actually this is full detailed class. I don't know that much time you'll be having, I don't know. But this is a class available for the time being, my dear lovable students. So that TDS and TCS, that is also available. And heads of income, various question solving I have attached to you. So this is the list of videos or classes which is available with us for your preparation. If this is helpful, you can use this. And the most important thing is, we are start uploading the 25 question of the computation of total income. I am requesting to you that if possible, at least to do 1 or 2 set. When you are doing that, don't listen to the class alone. After you hearing that class, pause the video, do that sum by spending 20-25 minutes. If that is the case, then computation of total income will be a cakewalk for you. And I have already uploaded a marathon on computation of GST payable. I hope that you all are using that. If you are able to complete this 5 hours and that 5 hours, nearly spending 10 hours, that 25 mark in examination can be assured. If you are a student who are going to write in this Jan, what you are supposed to do in tax is, instead of studying standalone chapters like set off, carry forward, clubbing, now do daily at least 2 questions of computation of total income and 2 questions of computation of GST payable. That will give you an added advantage in the examination for 25 mark. That will be a real game changer. Because if you are revising a big full length question, the level of clarity in the entire subject will increase. You will come across with a lot of adjustment. By that way, you can understand the tax as a whole. Because there are only 2 approaches are there. One is forward approach and reverse approach. Forward approach in the sense means I am studying everything and finally I am doing computation of total income. Reverse approach in the sense means, sir, by total income, I understanding lot of adjustments. Now it's the time to do the reverse approach rather than the forward approach for the coming examination. So whatever you can effectively study very effectively. It's not the matter how much topic you are leaving. It's the matter how much topic you are studying very properly in depth. That too, whatever you have studied till now, don't miss to revise that in the coming days. Still, I will tell you, now it's 29 only. You are having 30, 31, 1, 2, 3, 4 and 5. Still 1 week of solid time are there. Surely you would have prepared very well for this attempt. Those areas you focus now rather than going and studying anything new. A good student will revise what he has studied in the last 2 or 3 months. Rather than studying new topics and daily try to do at least 2 questions of computation of total income from DT and also 2 questions from computation of GST payable. To inform you this, what are the details available with me, I just come up. I believe that you will enjoy the computation of total income. If yes, share your happiness with me, sir, how much it is useful. We'll meet you with another useful video. Till that, thank you and bye-bye from me. Sir, very happy morning to all. Sir, we are going to start computation of total income and tax payable. First 14 mark question in our direct tax. A very important area. This is going to be a game changer. I will tell you why this is going to be a game changer, because if you are solving this one question, entire DT will be revised. Entire subject will be revised. Shall I start the proceeding? Sir, when you are reading the question, this is how you have to read a DT question. Mr. Ragesh, aged 45 years. Always underline or mark the age. Because based upon the age, the basic assumption limit will change. A resident Indian, that's the second criteria you should check. What is the age and what is the type of the assessee? Has provided the following information for the previous year ended 31/3/2024. He received royalty of 2,88,000 from abroad from a book authored by him in the nature of artistic. Somewhere you would have heard about this chapter 6A deduction. Which section? 80QQB is a reference here. That is royalty on books. The rate of royalty is 18% on the value of books, and expenditure made for earning this royalty was 40,000. Right, sir? Sir, only how much percentage deduction will be allowed? 15%. And whatever expenditure you have incurred to earn this income can be claimed as a deduction. The amount remitted to India till September 2023 is 2 lakh, how much? 30,000. So even though you are having 2,88,000, only 2,30,000 has been remitted to India. So only to that extent you are entitled to claim deduction under 80QQB. The same adjustment we have done in class. Yes, sir. He owns an industrial undertaking established in an SEZ. So inside SEZ you are having an industrial undertaking which had commenced operation during financial year 2021. When? 2020, not in our financial year. Our financial year is 23-24, right, sir? Total turnover of the undertaking was how much lakh? 200 lakh, which include 140 lakh from the export turnover. So they were doing what also? Export also. This industrial undertaking fulfill all the conditions of 10AA of the N Act, and profit from this industry is 25 lakh. This adjustment they have tested from section 10AA. Sir, as we all know that there is a cutoff date for section what A? 10A. Beyond that cutoff date, you are not entitled to claim deduction under section 10AA. I am coming to the third adjustment. He also sold his vacant land on 10/11/2023 for 13 lakh. Vacant land is a capital asset. So they are talking about the next head called as capital gain. Stamp duty value of the land at the time of transfer was 19.35 lakh. This was the stamp duty value. The fair market value of land as on 1st April 2001 was how much lakh? 5 lakh. That is a fair market value. 5 lakh. That is at the time of what? Base year. This land was acquired by him on 5/8/1995 for 1.75 lakh. That is the actual cost of acquisition. He has incurred registration expense of 20,000 at that time. We have to add the registration expenses. The cost of inflation index for the year 23-24 and 1-2 are 348 and 100 respectively. This they have tested from the capital gain. This is the first question you are reading. Have some patience. I'll connect it everything. First, I'm noting when you are reading the examination question, you should note from which area they have tested. Received 40,000 as interest on savings bank deposit. This is entitled to claim deduction under 80 TTA, but for that, you should be travel through the optional tax regime. So the entire 40,000 you have to include it under the head IFOS. He occupies ground floor of his residential building and has let out first floor for the residential use at an annual rent of 2,88,000. Sir, portion self-occupied and so portion self-occupied and portion let out. Comfortable? He has paid municipal taxes of 60,000 for the current financial year. That is for the entire building. Both floors are of equal size. That means it is 50-50. He paid insurance premium of 39,000 on life insurance policy of son, ATC chapter 6A, who is not dependent on him, self, spouse, children. That is a definition of family as per ATC. And 48,000 on the life insurance policy of his dependent father. Sir, parents allowed, but this is life insurance policy. Life insurance policy is not allowed. Only medical insurance policy is allowed. Because in the definition of family for ATC, parents is not covered, right, sir? He paid tuition fee of 42,000 for his 3 children to a school. The fees being 14,000 per annum per child. Only 2 child are allowed. 3 child are not allowed. You are required to compute the total income and tax liability of Mr. Rakesh under the normal provisions as well as 115 BAC for assessment year 24-25. Ignore AMT provision, JESSI provision. Don't go and apply. This is an MTP October 21 question, a 14 mark expected area for exam. Don't worry, be with me. We are going to calculate both the routes. Since first question I am doing, sir, listen carefully and understand the way in which you have to do. Computation of total income of Mr. Rajesh for assessment year 24. Always in your answer sheet, write first this, sir, income from salary. Is there any salary details given? Write and put a dash because your gross total income comprises of 5 heads of income. Salary, house property, PGBP, capital gain and IFOS. Then number 2 is income from what? House property. Is there any information relating to house property? Write and attach as a working note, my dear lovable students. So you have to attach it as note number 1. Computation of income from house property. This is let out portion. What portion? So first you have to declare in the answer sheet that whether you are calculating as per the normal provisions or the default provision. Always try to do first the normal provision because under normal provision all the deductions are allowed. All the deductions are. Once you solve the normal provision, you can alter the normal provision into default provision very easily. Comfortable? So I'm going to calculate the income from what property? House property. Chapter income from house property is a 5-step approach. GAV less LT bar MT, you will get the answer as net annual value, less deduction under section 24A, 30% of net annual value, less deduction under section 24B, you will get the answer as IOBC. If you reduce, you will get the answer as income from house property. Comfortable? So my dear lovable students, gross annual value. This is what category of house property is this? Portion self-occupied and portion let out. Question specifically said that what is a monthly rent for them? What is a monthly rent for them? Annual rent of 2,28,000. Sir, he occupies ground floor of his residential building and let out first floor for residential use at an annual rent of 2,28,000. So the entire 2,28,000 you would have received only for the let out portion. No amount you would have received for the self-occupied portion. Comfortable? So that 2,28,000 should be the gross annual value. Clear with this point? Less LT bar MT paid by the owner. Look at the question, my dear lovable students. What is the LT bar MT? 60,000 for the entire house. Yes, sir. My dear lovable students, only half is for the let out portion. Because for the self-occupied portion, LT bar MT is not allowed. So LT bar MT paid is allowed is how much? 30,000. So from the gross annual value, if you reduce the municipal value, you will get 1,98,000 as the net annual value. Comfortable? Sir, adoda 30%, that is 1,98,000 into 30% comes to 59,400. Is there any 24B IOBC information given in the question? Put a You have finalized the one head called as income from 1,38,600 attached to the main answer 1,38,600. Are you all really with me? Coming to the next statement, first state is income from salary, no information has been given, put a dash. Income from house property, information are given, sir, write it as a working note and the answer for that working note you attach with the main answer, comfortable. Coming to the profits and gains of business or profession, is there any business related information given in the question? Yes, sir. What is the business related information? 10AA related, right, sir? Sir, mark that as working note number 2. Hello, sir. So, computation of profits and gains of business or profession, that is what note number 2. Sir, income from the SEZ unit is how much lakhs, man? 25 lakhs. How much lakh? Read the question, that part once again, what they are saying. He owns an industrial undertaking established in where? And which are commenced operation during the financial year 2021. 1/4/2021 is the last date to claim deduction under section 10A. Yes, sir. The total turnover of understanding was 200 lakh, which include 140 lakh from export turnover. This industrial undertaking fulfill all the conditions of 10A of the Income Tax Act. Profit from this industry is how much lakh? They are not entitled to claim deduction under section 10A since they started, sir, very early. Now this section is expired. Now you may ask a question, sir, then why we are learning this section? Sometimes they would have started before this cutoff date. It is available for first 5 year and the next year. So during our year, it may be first 5 year or the next 5 year. Then they are entitled to still claim the deduction. That means for a continuing assessee, they can claim deduction under 10AA. But if they have started their operation after the cutoff date of 1/4/2021, they are not entitled to claim deduction under section 10. So PGBP income will be how much lakh? 25 lakhs. Comfortable? Shall I calculate the capital gain? Next head. Note number 3 is the target for capital gain. Sir, computation of capital gain. Sir, long-term capital gain on sale of land. My first question to you, is land a capital asset? Yes, sir. When you purchase the land, what is the date of purchase of land? Before base year. Sir, and you sold only in our year. That means it's a long-term capital asset. Surely it's a long-term capital asset. So we have to calculate the indexed cost of acquisition. Full value of consideration will be subject to deemed consideration, right, sir? So full value of consideration will be, since the capital asset has been acquired before base year, either the actual cost of acquisition or fair market value as on 1/4/2001, whichever is higher, or stamp duty value as on 1/4/2001, whichever is lower. Already discussed. So full value of consideration, higher of the stamp duty value, which is 19.35, and actual consideration of 13 lakh. Since stamp duty value exceeds actual consideration more than how much percentage? 10%, right, sir? So you have to take 19,35,000 as per what? Section 50C. So how much is the actual consideration you received? 13 lakhs. 13 lakh. What is the stamp duty value? 19.5 lakhs. You have to compare. If the actual consideration is less than the stamp duty value and stamp duty value exceeds 110% of the consideration, then stamp duty value has to be adopted as a full value of consideration. Are you able to apply? Sir, less cost of acquisition, less expense for transfer, put a dash because nothing has been mentioned in the question. Then you will be getting what consideration? Net consideration, which is nothing but 19,35,000. Less cost of acquisition or index cost of acquisition. Since the asset has been acquired before base year, either the actual cost of acquisition or fair market value as on 1/4/2001, whichever is comfortable. What is the actual cost of acquisition? 1,75,000 plus. Is there any stamp duty value you paid? Yes, sir. Expense, commission like that, anything paid? 20,000. Registration expense. So the total actual cost of acquisition is 1,95,000. But what is the fair market value as on 1/4/2001? 5 lakhs. Whichever is higher. So you have to take 5 lakh as the eligible cost of acquisition. Calculator, man. 5 lakh divided by what is the CAA for the base year? 100 into 348 comes to 17,40,000 is the indexed cost of. So the long-term capital gain comes to 1,95,000. This is what I am attaching here, 1,95,000. Are you comfortable with this also? So we have done salary nil. House property we have worked out with 5-step approach. GAV less LT bar MT paid by the owner, NAV less deduction under section 24A, less deduction under section 24B, you will get the answer as income from house property. PGBP actually 10A, but they are not entitled to claim the deduction under section 10A. So without claiming 10A, we have included as the PGBP income. Capital gain, they sold a land. Land is a capital asset. Since it has been holded for more than 24 months, such a land is a long-term capital asset. We have calculated the full value of consideration by applying section 50C. There is no expenses for transfer, you got the net consideration. Less not cost of acquisition, it is indexed to cost of acquisition. We got the long-term capital gain. Shall I finalize the IFOS, man? IFOS, you have to write working note number 4. Hello, sir. I'm going and checking working note number 4 IFOS. Very simple, man. Computation of income from what sources? Others. You are having a royalty of rupees how much? 2,88,000. Since this guy is having a business and from business he is getting 25 lakhs income, his major source of income is profits and gains of business or profession. So, I am not including royalty income from under the head PGBP, I am including under the head IFOS. Right, sir? Sir, if he is solely a writer, his main job or profession is to write the books, then I will include royalty under the head PGBP. Right, sir? Fantastic. What is the royalty from artistic book total? 2 lakh. As per 57 clause 3, any general expenditure you have incurred to earn that income, that can be claimed as deduction under the head IFOS. So less expenses incurred for earning royalty is how much? 40,000. So 2,48,000 is a taxable royalty. What royalty? And you are having some SB savings bank deposit account also. How much? So the IFOS income from other sources comes to 2,88,000. Comfortable? This has to be included. And that amount is eligible for chapter 6A deduction under 80 QQB that I will be coming. If you add income from salary, income from house property, PGBP, capital gain and IFOS, the answer what you are getting is called as gross total income. Comfortable. From that gross total income, you can claim chapter 6A deductions. You can claim what 6A deduction? And if there are any other deduction, they are having note number 5. Shall I go and check note number 5? Yes, sir. What is note number 5, sir? Computation of what deduction? Other deduction. What deduction? Sir, other deduction. Deduction under section what AA? 10AA. Sir, look at very carefully. Since the industrial undertaking is established where? SEZ. It is entitled to deduction under section what section? At the rate of how much percent? 10% of the export profit. Hello, sir. When they commence the operation, sir, 10AA, sir, they started in financial year 2021. Sir, what is the period? Till what period you have to start? 1/4/2021. So they started in 2021. So you tell me, sir, this date is very important. Is it within the time period or not within the time period? Within the time period. Oh. What is that date? What is that date? 1/4/2021. 1/4/2000. They started their business from 2021. That means, sir, financial year 2021. Financial year 2021. Financial year 21-22 and financial year 22-23 and financial year 23-24. Our financial year is the 4th financial year, which is in the block of the first 5 years. So how much percent reduction? Can we calculate 100% reduction? Okay, sir. Fantastic, sir. Sir, now they are saying, look at here, man. Deduction under section 10AA. Since the industrial undertaking is established in where? SEZ. It is entitled to deduction under section 10AA at 100% of the profit. Since previous year, our previous year, 23-24 being the 4th year of operations. How much percent deduction? Is there any formula to find out the 10AA deduction? Yes, sir. That is total profit into export turnover divided by total turnover. Right, sir. What is the total profit? 25 lakhs. Into how much is the export turnover? 140 lakhs. Divided by what is the total turnover? 200. That means 25 lakhs into 140 divided by 200 comes to 17.5 lakhs. Can we claim it as a deduction under what AA? That's what they have claimed here. Less other deduction, sir, 10AA 17,50,000. You can present this by way of reducing the PGBP also. By way of reducing the, sir, you can write PGBP as 25 lakh minus 17 lakh 50,000. Sir, intentionally I have confused this 10A provision. Now you all are listening very carefully what is happening, because that is an adjustment you should be taken care very well. If the 10AA are started till 31/3 or 1/4/2021, you are entitled to claim 10AA deduction. If you are setting up a unit on or after 1/4/2021, you are not entitled to claim the deduction. Now telivu, for that telivu, sir, you are entitled to move forward, right sir? Sir, other deduction. What man? Other deduction. Other deduction over 17 lakh 50,000. Shall we start with the chapter 6A deduction? Yes sir. What is the chapter 6A deduction? Sir, 80 QQB. Sir, deduction, computation of what 6A deduction? Note number 6. First one, deduction under 80C. Tuition fee paid for maximum how many children? 2 children is allowable. How much per children they are paying? So 14,000 into 2, 28,000. Comfortable? Insurance premium paid on life insurance of son allowable, even though not dependent on Mr. Rakesh. How much? Because the definition of 80C is equal to SSC. 80C, SSC. 80C, SSC. 80C, SSC. Self, spouse, child. Don't check the dependability of the children. So you are entitled to claim 39,000 as deduction. Then insurance premium paid on the life insurance policy of what? Father. Not allowable, even though father is dependent on Mr. Rakesh. Because, my dear lovable students, hello sir. Sir, father is not at all form part of family for the purpose of what? C? 80C. So you are not entitled to claim deduction. Now I am coming to deduction under 80, royalty on books. Royalty on what? Sir, maximum allowable deduction under 80 QQ will be 15%. But they got how much? So 2,88,000 divided by 18 into 15 comes to how much? 2,40,000, right? But you have not repatriated 2,40,000 to India. You repatriated only 2,30,000 to India. Out of this 2,30,000, under the head IFOS, you already claimed 40,000 as deduction. So the maximum will be 1,90,000 will be the deduction under 80 QQB. The same question we have done in the class. Comfortable, sir? And you are entitled to claim deduction under 80 TTA. This is savings bank interest. Either the eligible income or 10,000, whichever is lower. So 10,000 will be allowed as deduction. Comfortable, sir? So the total chapter 6A deduction will be 2,67,000. And you have to again cross check whether this amount exceed 1,50,000. No, because the maximum deduction under 80C will be, and 80 QQB and 80 TTA is not under the cover of 80 CCE, because 80C plus 80 CCC plus 80 CCD subsection 1 is equal to 80 CCE is equal to 1,50,000. So since 80 QQB and 80 TTA are not under the cover of 80 CCE, we can claim even 2,67,000 as the gross total income. Comfortable? So my dear lovable students, that's how the chapter 6A 2,67,000. Now you have the taxable income of 11,04,600. What a beautiful sailing it is. Are you able to appreciate? Inside that, my dear lovable students, now you have to analyze whether there is any special income or there. Computation of tax liability of Mr. Rakesh for assessment year 24-25 under the normal provisions of the Act, under the normal provision, not the default tax regime. Now tax on total income of 11,04,600. Always that 11,04,600 you have to classify like this. There is any special rate other than special rate. Yes, long-term capital gain is there. Long-term capital gain should be taxable at 20%. Right, sir? Yes, sir. How much is the amount of capital gain? 1,95,000. 1,90,000. So from 11,04,600, if you reduce 1,95,000, you will get 9,09,600. On that amount, you apply the basic exemption limit. Since you are having more than basic exemption limit, unexhausted basic exemption limit, sir, issue will not come. So for this 1,95,000, I have to pay tax at the rate of 20% under section 112, right, sir? So calculator man, 1,95,000 into 20% comes to 39,000 is the tax payable on the long-term capital gain. Comfortable? tax on remaining total income of 9,09,600. Shall we calculate? We know, are we in the normal tax route? Up to 2.5 lakhs is nil. Sir, 2.5 lakhs to 5 lakh. The gap of 2,50,000 into how much percent? Comes to 12,500. So the gap 5 lakh minus 9,09,600 comes to 4,09,600 at the rate of 20% comes to 81,920. So the total will be 94,420. So if you add the subtotal, my dear lovable students, the 39,000 plus 94,420 comes to 1,33,420. On that you have to multiply 104%. Correct, sir? You will be getting 1,38,757. That has to be round off. That has to be to the nearest multiple of 10. That is what 1,38,760. This is the tax payable under the normal provisions. Comfortable? Pakka? Question is not over. Only 50% is over. Only 7 mark you completed. You have to do the same question under the default tax regime. Sir, when you are claiming default tax regime, this is the 115 BAC route for assessment year 24-25. Sir, for that 115 BAC route, my dear lovable students, sir, you look at here. They have given one note. Computation of what? Payable. They have altered just the tax payable. First, you have to analyze, is there any deduction which is not allowed under the default tax regime has been claimed under the optional tax regime? Yes, sir. Which one? If yes, which one? Which one you have claimed? 10AA is 10AA allowed only under the optional tax regime? So what they are doing, I will tell you. Computation of tax liability of Rakesh as per 115 BAC. Gross total income as per the regular provisions of the Act. Gross total income. Look at here. Gross total income. Because, sir, 10AA and chapter 6A deduction are not allowed under the. That's why I am asking you, do always first the optional tax regime. Then from there we can do plus and minus easily. Comfortable? So you can start with the gross total income. Don't do and calculate again once again income from house property, PGBP, capital gain. Why are you wasting your time? Comfortable? Start with the gross total income of 31,21,000. Less deduction under what AA? Or deduction under what 6A? No deduction under 10AA or chapter 6A is allowed. And when you are saying this word, you should be very careful that 80 CCD subsection 2 is not there. 80 CCH subsection 2 is not there. 80 JJ, Onak JJ is not there. Because these 3 sections can be claimed as a deduction under both the tax regime. We have already discussed in the class. So since sir, both are not allowed, my dear lovable students, total income as per 115 BAC is 31,21,600. Comfortable? I'm going to calculate 31,21,600 tax payable. Sir, even in that also you have to analyze what are the special income and the other income. Special income will be tax rate 20%. 1,95,000 into 20% comes to 39,000. Comfortable? Calculator man, 31,21,600 minus 1,95,000 comes to 29,26,600 is the other income. On that, up to 3 lakh is nil. 3 lakh to 6 lakh, 6 lakh to 9 lakh, 9 lakh to 12 lakh, 12 lakh to 15 lakhs and above how much lakh? 15 lakh. This is the tax system. Sir, 5%, 10%, 15%, 20% directly 15,000, 30,000, 45,000, 60,000 with this there is an increase of 15,000 each. Right, sir? Sir, the total tax payable comes to 4,27,000 what? 980. Hello, sir. Which is 15 lakhs into above 15 lakhs how much? Total how much? 29,26,600 minus how much lakh? 15 lakhs. So 14,26,600 into 30% comes to 4,27,000 plus 60,000 plus 45,000 plus 30,000 plus 15,000, right, sir? Plus 39,000. You will be getting subtotal of 6,16,980. இதுக்கு மேல 6,16,980 into 104% comes to 6,41,659, which will be round off to 6,41,660. Comfortable? Since tax liability as per 115 back is higher than the tax liability under the normal provisions of the Act. It is beneficial for Mr. Ragesh not to excise option under 115 back. Because the tax payable under the back is 6,41,660, but the tax payable under the default tax regime is normal tax regime is 1,38,760, which is better. So don't come under the default tax regime. Don't choose the option. You travel through the normal provisions of the Act itself, because then only your tax is less comfortable, sir. Sir, I will check whether I have completed all the notes. Computation of income from house property, self-occupied portion. No deduction is allowable in respect of municipal taxes paid. Hence, income from house property will be 1,38,600. All the other notes we have done, man. Sir, it is very easy to do a computation of total income sum. Sir, any one point. Everything we have discussed, but we are aggregating in one place. Right, sir? Point number 1. I will tell you, don't do a mistake. Which mistake you should not do? Sir, this I have solved. You have not solved. You have to pause the video and you have to take your pen, pencil, rubber, cutter. You have to sit. Keep a time of 15-20 minutes. You have to solve. If you are solving 4 to 5 questions along with me, you will say that I love you, sir. Computation of total income is mine, sir. 14 mark is mine, sir. If you want, you have to solve this. Sir, in this January, we are going to solve 25 questions of computation of total income, and we are going to seal that 14 mark in examination. Take a break of 15 minutes time. Sit and solve this question, my dear lovable students. Then we will continue with question number 2. Sir, very, very, very happy morning to all. We are doing computation of total income, 25 question for this January examination. Our target is 1 by 25. We have completed 1 question out of 25 question. We are moving to the second question, question number 2. And you know, this question have been attached in MTP November 2021. Fantastic, sir. From the following information provided by Mr. Suresh, aged 43 years, and a wholesale dealer for assessment year 24-25, you are required to compute tax payable by him. So this question is like a trading P&L account format question. They have given the sales, they have given the closing stock. Okay, sir. Opening stock, purchases, direct expenses, freight inward, gross profit they have given. Same GP has been brought forward, 77,51,000. Right, sir? By dividend from Indian company, sir, dividend should be taxable under what OS? But they have credited to P&L account. Because of crediting the other head's income to the PGBP, PGBP increases. It should not happen. You have to reduce from PGBP and you have to include in the respective head of income. Comfortable? By interest received on FD, always you should be very careful. This is net of tax. This is what? Net of tax. So, for interest other than interest on security, 194A, TDS at the rate of 10% will be applicable. So, this will be 90%. Are you all really with me? Only 90% has been credited to PGBP income. So, PGBP income would have been increased by 90%. So, you have to remove the 90%. And when you are including under IFOS, you have to include 100%. Comfortable? Rent received 7,20,000. This has to be taxable under IFHP. But this has been credited to PGBP. So, PGBP would have been increased. You have to remove from the PGBP and you have to include in the IFHP. Income tax refund 13,000. Sometimes this may include principal and interest, but no need to think when you are reducing from PGBP. From the PGBP, entire amount has to be reduced. And sir, under IFOS, only interest has to be included. Principal, we will not include under the logic. Sir, what amount I paid only, I am getting it as back. Then why I have to again include and pay the tax? It will be a unnecessary double taxation, right, sir? So this has to be included in the IFOS, only the interest component. Coming to the debit side, salaries and wages allowed, general expenses generally allowed, rates and taxes generally allowed, interest paid on late fee of GST are allowed generally because there is a delay in filing the return. Section 37 outward supply, Section 38 inward supply, Section 39 filing of return, 40 first return, 41 ITC on provisional basis, 42 matching concept, 43 matching concept, 44 annual return, 45 final return, 46 notice to return defaulter, 47 is late fee, and 48 is GST practitioners. Your GST teacher would have already taught all this. So, my dear lovable students, sir, as per section 50, you may pay some interest delay for filing the returns. That is allowed, man. That is not illegal. That is not illegal. Only penalty is illegal. Interest is what? Allowed. Income tax paid should not be debited to P&L account. That is a straightaway disallowance. 40A subsection 2. As per 40A subsection 2, income tax debited to P&L account should be in the back. I am calculating tax payable. Sir, current ke current tax ke tax. That tax should not be debited to P&L account, should be in the back. Interest paid to NBFC, since they have mentioned it as paid, sir, it is allowed. Depreciation as per Income Tax Act is allowed. This is the reported net profit, my dear lovable students. Comfortable? The following additional information is provided by him. Here only the real question starts. Closing stock of previous year 23-24 was undervalued by how much? So the stock valuation is wrong. If the closing stock reduces, net profit reduces, right, sir? So we have to add 55,000 to the net profit. Comfortable? Rates and taxes include rupees 1,000 paid towards late filing of income tax return for assessment year 23-24 under section 234F of the What Act, income tax. Any income tax debited to P&L account, you are adding back. So late fee paid to income tax department also we should end back. Added back, because that is also a type of income tax. Hello, sir. That is not interest. That is late fees. It's just like a penalty what you are paying. Right, sir? Salaries include 30,000 paid on a single day by way of cash to his account, and 40A subsection 3. Cash payment exceeding 10,000 or 35,000 as the interest paid on loan. How much lakh? 10 lakh. Taken from NBFC. Out of the loan amount, rupees 2 lakh was used for what purpose? Then the interest attributable to the personal purpose should not be debited to P&L account, should be in the back. And balance was used for what purpose? No TDS was deducted while paying the interest on loan. That means the interest attributable to the personal component 100% should be added back. The balance will be the interest attributable to the business component. On the TDS has not been deducted, 30% should be disallowed as per section 40A subsection 1A. Hello, sir? Yes, sir. An amount of 35,000 was paid by check. Okay, fine. During the year towards health insurance policy covering himself, his spouse and his children. Sir, self, spouse, depending children. 80D is the target. Look at the age, man. Sir, Mr. Suresh, aged less than 60, only 25,000 is allowed. But paid is 35,000, 25,000 is allowed. Right, sir? General expense include advertisement expense of how much? Paid by check towards an advertisement in Sovereign published by a local political party. This should be added back as per section 37 subsection 2B. And since the assessee is an individual, he can claim it as deduction under section 80 GGC. 80 GGC. 80 GGB is applicable to a company, whereas 80 GGC is applicable to a. In order to claim deduction under 80 GGC, assessee should be other than company, and you should contribute to a political party. That political party should be registered under ROPA. This is local political party. No deduction under 80 GGC. That local. Hello, sir. Local, that's it, gone. That means you are not supposed to claim chapter 6A deduction under. Income tax refund include 2,500 towards interest. Only that much amount will be taxable under what? IFOS. Depreciation charged as per income tax rules is how much? 2 lakh. Advance tax paid is 9 lakh. Sir, after you calculated the tax payable, net tax payable, reduce what tax? Because to that extent you already paid to the government. Yes, sir. TDS has been deducted on interest on FD at the rate of 10% under section 194A. Hello, sir. Turnover for the year ended 31/3/2023 was 2.58 crore. That means in the last year turnover is more than 1 crore. That means in case of individual or HUF, sir, in the immediately preceding previous year, if the turnover exceeds 1 crore or 50 lakhs as the, you are liable to deduct TDS for hijacker. 194H, 194I, 194J, 194A, 194C, 194R. So that benefit you will not be able to appreciate. Every point we have discussed. Are you all really with me? I'm going to link it one by one. Computation of total income of Mr. Suresh for assessment year 24-25. First, always write this format. Sir, income from salary. Is there any detail? Put a dash. Let the answer be length. Sir, income from what property? House property. Is there any detail? Yes, sir. Sir, they said that, sir, this much rent has been received and that has been credited to the P&L account. Actually, fair rent or municipal value, whichever is higher or standard rent, whichever is lower, that answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is, but that information has not been given in the. So whatever rent received will be taken as the gross annual value. Shall I do complete the income from house property? Annual value. Rent received has been taken as what value? Due to the absence of information relating to expected rent in the question comes to 7 lakh. Less LT bar MT paid by the owner. Is there any LT bar MT paid by the owner? No, sir. So this amount will be the net annual value. On that net annual value, you have to reduce, sir, 30% of net annual value under section 24A. So 7,20,000 into 30% comes to 2,16,000. What is the income from house property? 5,04,000. Comfortable? This has to be attached to our answer, man. Sir, your income from house property is 5,04,000. Comfortable? What is the profits and gains of business or profession? Big calculation. Because lot of things has to be reduced. Lot of things has to be added back. Be with me. PGBP is the hero in this question. Shall I? Tell me and participate along with me. What is the net profit as per P&L account? 73,55,815. Is this the correct net profit? No. Lot of unnecessary item has been credited. Lot of unnecessary item has been debited. Add. Excess payment debited to P&L account but not allowed. Depreciation as per books of accounts 1,82,000 should be what back? And depreciation as per income tax rules has to be reduced. They have specifically given, right, sir? That's what less depreciation as per income tax rules 2,20,000. Comfortable? Now fees for late filing of what return? Income tax return for assessment year 23-24 disallowed. Sir, income tax debited to P&L account should be added back. Fees paid under 234F should be what back? Added back. Because this is for late filing of income tax return, not the interest under 234A. This is late fee. This is in penalty in nature. If debited to P&L account should be in the back. 1,000 rupees should be added back. Comfortable? Salary paid to an accountant in cash exceeding how much? Disallowed under section 40A subsection 3. Cash payment exceeding 10,000 or 35,000 as the case may be, debited to P&L account should be. So 30,000 should be added back. Comfortable? Interest paid to NBFC on which it is used for what purpose? Personal purpose. My question to you, you have to answer me. How much is the total interest paid? 1,15,000. What is the total loan? 10 lakhs. Out of the 10 lakh loan, how much has been used for personal purpose? So 1,15,000 into 2 lakhs divided by 10 lakhs comes to 23,000. 100% should be added back, right, sir? Because this much amount of loan has been used for personal purpose. So this much interest should not be debited to P&L account. Because section 36 subsection 1 clause 3, interest on borrowed capital is saying that loan should be for the purpose of business or profession. Here loan is for the purpose of personal. So to that extent you should what back? Added back. So from 1,15,000, if you reduce 23,000, my dear lovable students, you will be getting, for this amount you have not deducted TDS. So 30% of this 92,000 should be in the back. That's what? Interest paid to NBFC on which tax is not deducted. Attract disallowance at 30% of what? 92,000. Under 40A subsection 1A. Hello, sir? Yes, sir. Since Mr. Suresh turnover for immediately preceding year, that is 22-23, exceeds how much crore? He is required to deduct tax at source or under all the section of the Income Tax Act. Comfortable? So deduction at 30% of interest is attracted for non-deduction of TDS. So what is the interest balance amount? 92,000 into 30% come to 27,600. Should be in the back, added back. Any income tax debited to P&L account as per 40A subsection 2 should be in the back. Interest paid on late filing of GST. This is interest. Interest is generally allowed. I will tell you why. Interest is time value of money. Instead of today you pay tax, after 1 week you are paying tax, means for the time value of money you are paying the interest. That is not a penalty. That is not an infraction of law. That is allowed. So allowed, since it is not for what of law? But is it in compensatory in nature? Just for time value of money, my dear lovable students, you are paying that interest. So no need to add it back. Advertisement expenditure towards an advertisement in souvenir published by local political party, sir, should be disallowed under 37 subsection. So that 25,000 should be in the back, added back. Because of undervaluation of closing stock, your net profit would have been reduced. So you should manually, sir, 55,000, you will get the subtotal. Comfortable? Sir, less income chargeable under other head. That means this income will not be chargeable under the head PGBP, but this has been credited to PGBP, and income not chargeable to tax but credited to PGBP. Hello, sir. Dividend from Indian company. You tell me dividend from Indian company will be taxable under which head of income? So this 17,20,000 should be reduced from the PGBP and should be included in the interest on FD, net of taxes. When you are reducing from PGBP, you should reduce only net of tax, because only that much amount you credited to the P&L account. Comfortable? But when you are including under the NOS, IFOS, you have to include 100%, including TDS. Comfortable? So that's what, 1,17,000. Rent received, it is going to be taxed under IFHP. We already calculated 7,20,000, but credited to PGBP. Because of that, net profit would have been increased. We have to reduce it. Comfortable? Income tax refund, total income tax refund has to be reduced while calculating the PGBP, but interest on income tax has to be taxed under what OS? IFOS, which comes to 13. So profits and gains of business or profession is 52,54,415 is the profits and gains of business or profession. Comfortable? Such a beautiful computation of PGBP. Yeah, that has to be attached to the calculation here, man. So the next one, profits and gains of business or profession. Is there any capital gain? No, sir. So you have to write and put a, but we are having sufficient IFOS information. Shall we fill the IFOS? Note number 3 is talking about IFOS, computation of income from other sources. First one, dividend from Indian company. What is the amount credited to P&L account? You confirm? 17 lakh. Actually, the company should have deducted TDS under 194. But 194 details has not been mentioned in the question. So I have not taken it as net of tax. I have taken it as gross of tax. Comfortable? Because section 193 interest on security, 194 dividend. Right. Gross na avangale specific ah kuduthirukka. Interest on FD, my dear lovable students, I received only 1,17,000. So 1,17,000 divided by 90% comes to 1,30,000 rupees is the gross. But when I reduce from PGBP, I will reduce only 90%. Comfortable? Interest on income tax refund is 2,500. I have not received from PGBP 2,500. I reduced how much? 13,000. That include principal component also. That will not be taxable under what OS? IFOS. Only the interest portion will be taxable under IFOS. So the income from other sources is 18,52,500 is the taxable income from what? Other sources. Comfortable? That's it. So income from salary plus income from house property plus PGBP plus capital gain plus IFOS, you will get the gross total income of 76,10,915. Shall I start claiming chapter 6A? Only one chapter 6A is allowed, 80D. Sir, even though he paid more than 25,000, but will be restricted to 80 GGs is not allowed because he contribute to a local political party, right, sir? You should contribute to a political party which are covered under ROPA Act, Representation of People's Act. So computation of chapter 6A deduction. Deduction under 80D, 25,000. Health insurance premium paid for self, spouse and his children allowable as deduction to the extent of 25,000. Comfortable? Deduction under 80 GGC, expenditure towards advertisement in souvenir published by local political party not allowed as deduction. So the total deduction under 80 sir, chapter 6A deduction, which is 80C to 80U, will be 20. That I am claiming, my dear lovable students, 25,000 as chapter 6A deduction. I will get the taxable income. I will be round off because always taxable income will be round off to the multiple of. So 75,80,920 is a round off. Then I will start calculating the tax. Right, sir? Computation of tax payable by Mr. Suresh for assessment year 24-25. Tell me normal provisions. Optional tax regime. Up to 2.5 lakhs, nil. 2.5 lakhs to 5 lakh at 5% comes to 12,000. 5 lakhs to 10 lakh, 20% comes to 1 lakh. Sir, above, sir, how much lakh? 10 lakhs. Take your calculator, man. What is the total income? 75 lakh 85,920. Yeah. Minus 10 lakhs. Comes to how much? 65 lakh 85,920. Into how much person? Comes to 19 lakh 75,776. Sir, who's the assessee? Individual, HCF, AOP, BOI? Individual. Total income exceeds 50 lakh. Sir, total income exceed? Surcharge at the rate of 10% will be applicable. Surcharge at the rate of. So if you are an assessee, if your total income exceed how much lakh? 50 lakh. You are a badawala. From the badawala, government will charge surcharge at the rate of 10%. Comfortable, sir? So my dear lovable students, 12,500 plus 1 lakhs plus 19 lakh 75,776 comes to 20 lakh 88,276 is the subtotal, just the tax component. Since assessee is an individual and individual's total income exceed 50 lakhs is liable to pay surcharge at the rate of. Surcharge means tax on tax. On this tax, you have to apply how much percent? So into 10% comes to 2,08,828. Comfortable. Now both on tax, actually surcharge is also part of tax only. So 20,88,276 into 110% comes to 22,97,104. 22,97,104 into 104% comes to 23,88,987. Right, sir? Will be round off to 22,88,988. Are you getting it? Question specifically said that, sir, they paid advance tax of how much lakh? 9 lakh. So you have to reduce advance tax of 9 lakh. And we already know that from FD 194A, TDS has been deducted to the extent of how much? 13,000. So the tax payable under the normal provisions will be 14,75,000. If there is any takeaway in this question, this is the takeaway. Sir, in case of an individual, if the total income exceeds 50 lakhs, they are liable to pay surcharge at the rate of. Surcharge means tax on tax. That means it is only tax. So basic tax payable plus the surcharge will be the total tax payable. On both, you have to apply 104%. Comfortable? Because cess is on tax. Surcharge means tax on tax. So that is also a part of tax. Comfortable? That's it, man. We have done with the first route called as optional tax regime. Computation of tax liability of Mr. Suresh as per 115 BAC for assessment year 24-25. Sir, first always I will compute which route? Normal route. Then I will start with the gross total income. I will start with the. Go and see the gross total income. 76,10,915. Right, sir? That's what gross total income as per the regular provision is 76,10,915. Comfortable? Sir, under the default tax regime, 10AA deduction is not allowed. Chapter 6A deduction is. That's what less deduction under 10AA, deduction under chapter 6A, no deduction under 10AA or under chapter 6A is allowed. So total income under 115 BAC will be same, 76,10,915. Comfortable? Now I am going to calculate the tax payable as per 115 BAC. Sir, it is like up to 3 lakh, 3 lakh to 6 lakh, 6 lakh to 9 lakh, 9 lakh to 12 lakh, 12 lakh to 15 lakh and above how much lakh? 15 lakh. Comfortable? It's fixed payment, man. Sir, up to 3 lakh no tax. Then 15,000. Again, add 15 more thousand. 15 plus 15? 30,000 plus 15? 45,000 plus 15? This is how it works. Hello, sir. Over and above 15 lakh, take your calculator. 76 lakh 10,920 minus 15 lakhs comes to 61 lakh 10,920 into 30% comes to 18 lakh 33,276. Comfortable? So the total tax plus 60 plus 45 plus 30 plus 15 comes to 19 lakh 83,276. This is the tax payable. Is this, sir, total income exceed 50 lakh? Still is liable to pay surcharge even under the default tax regime at the rate of 10%. Right, sir? So on 19 lakh 83,276 into 10% comes to 1,98,328 is the amount of surcharge. This both are what only? Tax only. So 19,83,276 plus 1,98,328 comes to 21,81,604 into 104% straight away, sir. 22,68,868. You have already paid advance tax of, sir, TDS has been deducted 13,000. So minus 22 lakh 68,868 minus 9 lakh minus 13,000 comes to 13 lakh 55,868. That will be round off to 13 lakh 55,870. Comfortable? If you are traveling through the default tax regime, you are having only 13 lakh. But if you are traveling through the optional tax regime, you are liable to pay 14 lakh. Which is better? Since a tax liability as per 115 BAC is lower than the tax liability under the normal provisions of the Act, it is beneficial for Mr. Suresh to exercise option under 115. He has to exercise this option on or before the due date of furnishing the what of income. Further, he is having income from business or profession during the previous year 23. He opt for 115 BAC for this previous year. Said provision would apply for subsequent assessment year as well. I will tell you one more takeaway from this question. Which route is better? Default tax regime. So, sir, come out of the optional tax regime and start travel through the. Is this guy is having PGBP income? Once, if you are having PGBP income and if you choose the default tax regime, lifelong you have to travel through the. Otherwise, every year you can go down, like that. You can do. Now read it. Since tax liability as per 115 BAC is lower than tax liability under the, it is beneficial for Mr. Suresh to exercise option under what section? So it's better to travel through the default tax regime. He has to exercise this option on or before the what date? Due date of, sir, furnishing the return of income. If you want to travel through the default tax regime, you have to choose this before filing the. Further, if he's having income from what or what? Business or profession during the previous year 23-24, sir, is he having? Yes, sir. He's having PGBP income. If he opt for 115 BAC for this previous year, said provision would apply for subsequent assessment year as well. So if you are having PGBP income and if you are adopting default tax regime, lifelong default tax regime only, you can't go back to the. If you don't have PGBP income, every year you can choose whichever is beneficial. Comfortable? I hope no note I have missed, my dear lovable students. That's it with regard to question number what? 2. It's very easy to, sir, listening to the explanation. If you are doing also along with me by taking 15-20 minutes, idumari 25 question will not come in exam. One question only will come in exam. And I will tell you beyond the time, after 4-5 questions, the adjustment is going to be repetitive. Adjustment, you'll be feeling so much comfortable with all the adjustments. For that, first 5 question will set the trend. Question number 1, 2, 3, 4, 5. Sit and do properly. As if you are writing examination by spending 30 minutes, 45 minutes, 1 hour of your time. If you want to pass in this Jan, otherwise don't dream of that. Sir, this is going to be a game changer, my dear lovable students. This time, sir, this 15 mark in direct tax and 10 mark in IDT will make a huge impact for Jan. 25-year question paper we are working out for DT. 25 questions we have already worked out for IDT. This January. I am with you from your heart. Anybody is there? Where is a grand clap? Yes, sir. Very, very, very happy morning to all. Sir, we are in the, sir, computation of total income question solving series. In that we have already done first 2 questions. I am moving to illustration number 3. This question is MTP April 21 and May 2019 past examination question. So like this only examination question is asking. You are required to compute the total income and tax payable by Mr. Josh, aged 48 years. Very important, underline age, 48 years. From the following information provided by him for assessment year 24-25. Mr. Josh does not want to opt for 115 BAC for the assessment year 24-25. Does not want to opt. That means he want to travel through default tax regime. Right, sir? Basic salary at 51,000 per month. DA 10,000 per month. Part of salary for what benefit? Retirement benefits. HRA 4,000 per month. And rent paid for house is 7,000 per month. So the rent paid is how much? 7,000. So he is paying rent and he is receiving HRA. So 1013A provisions will be applicable. Rent paid in excess of 10% of salary, actual HRA received, 50% of salary in metropolitan cities like Mumbai, Calcutta, Delhi, Chennai, and 40% in other places. Right, sir? He owns a commercial building. So this is from income from salary, chapter 5. He owns a commercial building at Mumbai, which is let out on 1/7/2022. That is 22-23 onwards. Our financial year is 23-24. At a monthly rent of 46,000 to ABC Limited. So this can be taken as the gross annual value. He paid municipal tax of 27,000 and 25,000 for financial year 22-23 and 23-24 on 31/3/2024. That is on our financial year end they have paid. So last year LT bar MT also paid only during our previous year. That means last year you would have not claimed it as a deduction. So LT bar MT paid by the owner. Right, sir? And 24/2024 respectively, fair rent of the building is 33,000 per month. So they have given how to compute the fair rent also. What is this fair rent means? Sir, expected rent. To calculate the expected rent. So this is income from what property? He purchased 4,000 unlisted shares of Maharaja Limited. Capital asset on 25/2/2008 for rupees 80,000. Company declared bonus of rupees 1:1 on 15th March 2008. That is the date of issue of bonus share. So from that date, they are holding the bonus share. Mr. Josh sold 3,000 bonus share on 15/1/2024 for how much lakh? 2 lakh. To his friend, Mr. Mahul, through unrecognized stock exchange. That means that is not a super asset. Provisions of 112A will not be applicable. And since the bonus share has been issued after base year, cost of acquisition you have to take it as 0. Cost of acquisition you have to take it as. So this is the CII, my dear lovable students. In April 2023, he received dividend of what? 9 lakh from ABC Limited, an Indian company. The dividend is declared by company in previous year 22-23. He received the dividend, sir, in April 2023. So in our financial year 23-24 only, he received the dividend. So this will be taxable under the head what? IFOS. Interest from savings bank with SBI, 15,000. Savings bank interest. So he's having savings bank account, 80 TTA, and lottery income net of TDS are 21,000. Both will be taxable under income from other sources. He paid the following amount during previous year 23-24. Deposit in PPF account 1,50,000. You are entitled to claim deduction under medical insurance premium paid for health of his wife 19,000 and for health of dependent son 12,000. But put together will be restricted to 25,000. All the points are known points. Right, sir? Very easy. 14 mark in the start of the question, man. Shall we do together? Listen here, man. Income from salary, I am going to finalize. Working note number 1 is income from salary. Basic salary. Look at the question and tell me what is the basic salary per month. So 51,000 into 12 comes to 6,12,000. Comfortable? DA, how much per month? So 10,000 into 12 comes to 1,20,000. Comfortable? HRA, house rent allowance, how much is getting per month? 4,000 into 12 comes to 48,000 is the HRA, house rent allowance. On that he is entitled to claim 13A, 1013A, which is least of the three. Rent paid in excess of 10% of salary. Actual HRA received 50% of salary in metropolitan cities like Mumbai, Calcutta, Delhi, Chennai, and 40% in other places. Comfortable? So my dear lovable students, sir, I have to calculate the definition of the salary. Salary means basic salary plus DA if provided in terms of employment plus commission as a fixed percentage of. Here salary means only two things are there, which is 6,12,000 plus 1,20,000 comes to 7,32,000 into how much percent? Comes to 73,200 is the 10% of the salary. 10% of the. Now I have to see what is the rent paid. Sir, what is the monthly rent paid? 7,000 per month. So 7,000 into 12 comes to 84,000. Sir, what is the rule? Rent paid in excess of 10% of salary. What is the 10% of salary? 73,200. What is the rent paid? So 84,000 minus 73,200 comes to 10,800 is one limb. Then actual என்ன received? HRA received. What is the actual HRA? 48,000. Right, sir? And the next one is 50% of the salary. What is the salary, man? 6,12,000 plus 1,20,000 comes to 7,32,000. Into how much percent? Comes to 3,66,000. Are you getting it? That means least of the three is 10,800. So from 48,000, reduce 10,800, you will get 37,200. Are you getting it? Sir, you will be getting the gross salary. Take your calculator. What is the basic salary? 6,12,000 plus DA 1,20,000 plus HRA 37,200 comes to 7,69,200 is the what salary? Gross salary. Can you claim, sir, deduction under 16 subsection 1A? Either the gross salary or standard deduction of 50,000, whichever is. That's why you are claiming 50,000, man. You will get income from salary of 7,19,200. I finalize 7,19,200. Very comfortable. Coming to the next sheet, man. Income from what property? House property. Sir, I'm working out number 2. Computation of income from what property? Is this let out property or self-occupied property? Let out property. Is a how many step approach? GAV less LT bar MT paid by the owner. You will get answer as net annual value less deduction under section 24A 30% of net annual value. Sir, less deduction under 24B interest on borrowed capital. You will get the answer as income from house property. Comfortable? So GAV, sir, look at here. What is the fair rent given in the question? 33,000. So 33,000 into how much month? 9 months or 12 months? Sir, how much months let out? Look at here. He owns a commercial building at Mumbai, which is let out on 1/7/2022. 22 means what financial year? 22-23. What is our financial year? If it is 1/7/2022, in our it will become 12 months. Yes, sir. It should be 1/7/2023. Right, sir. Then during our financial year is 23-24. Then July, August, September, October, November, December, January, February, March. How much month? So make it to 1/7/2023. Comfortable? So my dear lovable students, sir, what into what? How much is the fair rent? 33,000 into 9 months comes to 2,97,000 is the expected rent, right, sir? So expected rent is equal to 2,97,000. And what is the monthly rent? 40. So 46,000 into 9 comes to 4,14,000. Right, sir? That is the actual rent received is equal to 4,14,000. So expected rent or actual rent received or receivable, whichever is higher, comes to 4,14,000. So that's what GAV 46,000 into 9 being the higher of actual rent received and what rent? Fair rent. Can you reduce less LT bar MT paid by the owner? During our financial year 23-24, sir, how much rent has been, how much municipal tax has been paid? 27,000. It is irrelevant whether that relate to our financial year or the last financial year, because last financial year you have not paid. Are you really with me? Less LT bar MT paid by the owner. Comfortable, sir? So the net annual value comes to 4,14,000 minus 27,000 comes to 3,87,000. Adoda 30% will be the standard deduction, which comes to 1,16,000. And income from house property will be 2,70,900. Are you really with me? Because there is no interest on borrowed capital in the question. So my dear lovable students, 2,70,900 is the income from. There is no PGBP detail. Generally like this only question will ask. If they ask all the other 4 heads of income, they will omit PGBP. Sir, if they are asking big PGBP, they will omit salary and the other details. Are you really with me? Sir, if they are focusing on PGBP, big PGP adjustment will be giving, like yesterday illustration number 2. But today there is no PGP. That's why they are having income from salary, house property, and the, sir, capital gain and IFOS. Comfortable? Yes, sir. Sir, shall we work out capital gain? Is it a super asset or other than super asset? Computation of capital gain. It's a 8-step approach as per section 48. Full value of consideration. For how much rupees you sold? 2 lakhs. Is there any expense for transfer? No. You will get the answer as net consideration. You tell me less cost of acquisition of bonus share. Since a bonus share has been allotted after the base year, cost of acquisition has to be taken as nil. And when the bonus share has been issued, look at the question and tell me. What is the date of issue of bonus share? 15th March 2000. From there you have held it for more than 24 months. That means the nature of capital asset is a long-term capital asset. Then the gain will be long-term capital gain. So 2 lakh will be long-term. Since you have not sold through recognized stock exchange, provisions of 112A will not be. 112 will be applicable and taxable at a concessional rate of 20%. Comfortable? So that's what capital gain is. How much lakh? 2 lakh. Yes, sir. Sir, income from what sources? Other sources. Shall we finalize IFOS now? Computation of income from other sources. Dividend received from ABC Limited. You tell me. Now dividend will be taxable in the hands of the company or shareholder. Shareholder. Under the head income from other sources. So that 9 lakh will be taxable in the hands of the shareholder. Right, sir? Interest from savings bank account with SBI. How much rupees? 15,000. But for this you are entitled to claim 80 TTA as chapter 6A deduction. Since this guy has gone out of the default tax regime. And lottery winning, how much received? Gone out of the default tax regime. Right, sir? Sir, lottery winning, how much is the amount received? 21,000. That is how much percent? 30% TDS. That means this will be 70%. So 21,000 divided by 70% comes to 30,000 rupees is the lottery winnings. Comfortable, sir? So the income from other sources will be 9 lakh dividend, interest from savings bank account 15,000, lottery winning 30,000, total comes to 9 lakh 45,000 is the IFOS. Comfortable? So that's it, 9 lakh 45. Sir, have you all understood the salary adjustment? House property adjustment? There is no PGBP. Sir, we have finalized the capital gain and there is, sir, we have finalized the IFOS. So the gross total income will be 7,19,200 plus 2,70,900 plus 2 lakhs plus 9,45,000 comes to 21,35,100. Shall we reduce the chapter 6A? Under what route you are going? Optional tax regime. Chapter 6A is allowed. I'm going to, sir, calculate the computation of chapter 6A deduction. Deduction under ATC. If you deposit in PPF, you are entitled to get ATC. Deduction under what? ATD. Medical insurance premium for wife and dependent son. Because ATD, the definition of family is self, spouse, dependent children. This is, sir, set number 1. So, even though they paid 31,000, how much is allowed? 25,000 is allowed. Comfortable, sir. Deduction under 80 TTA, interest on savings bank account with what? SBI comes to how much? Total deduction will be 1,85,000. Comfortable? So 1,85,000 can be claimed as chapter 6A deduction. You will get the taxable income of 19,50,100. This is less than 50 lakh. So no surcharge at the rate of 10%. Comfortable? This you should listen when you are doing the sum. And inside the what total income, you are having casual income taxable at 30% plus long-term capital gain taxable at 20%. That should be treated separately. Only on the balance other income, you have to apply the slab rate. And if that income is less than the basic exemption limit, the unexhausted basic exemption limit, you can set off against a long-term capital gain, not against the casual income. Comfortable? These are the rules. So computation of tax liability of Mr. Josh for assessment year 24-25. Total income, sir, 19,50,100. Segregate the total income into 3. Tax on long-term capital gain of 2 lakh. At how much percent? Why 20%? Because 112A is not applicable. 112 only will be applicable. So 2 lakh into 20% come to 40,000. Comfortable? Tax on lottery income. Sir, what is the lottery income? 30,000 at the rate of 30 percentage under section 115 BB. So 30,000 to 30%, 9,000 is the tax payable. Comfortable? Tax on other income 17 lakh 20,100. How, sir? From 19 lakh 50,100, if you reduce 2 lakh rupees long term capital gain and 30,000 rupees casual income, balance will be 17 lakh 20,000. On this 17 lakh 20,100, you apply the slab rate. That means up to 2.5 lakhs nil. Why 2.5 lakh? Because SS is traveling through the optional tax regime. Comfortable? Sir, 2.5 lakhs to 5 lakhs, the gap of 2 lakh 50,000 at the rate of 5 percentage, which comes to 12,000. 5 lakh to 10 lakhs, there is a gap of 5 lakhs. 5 lakhs into 20 percentage comes to how much lakh? 1 lakh. Sir, more than how much lakh? 10 lakh. What is the gap, man? 7 lakh 20,100 into 30 percentage comes to 2 lakh 16,030. Comfortable? So the total tax payable, take your calculator, for long-term capital gain 40,000, for casual income 9,000. Sir, first slab 12,500, second slab 1 lakh, third slab 2 lakh 16,030 comes to 3 lakh 77,530 is the subtotal. Comfortable? Add health and education cess at the rate of, sir, into 4 percentage come to 15,101. Total tax liability will be 3 lakh 92,631. This is a tax payable. Against this tax payable, whatever TDS has been deducted, like TDS on lottery income, how much? Sir, as per what section this TDS would have been deducted? 194B, Bhagya. TDS on rent under 194I, right, sir? Yes, sir. 194I, TDS on rent. You received how much GAV? 4,14,000. As per 194I, on that 4,14,000, they would have deducted TDS at how much percent? So 4,14,000 to 10 percentage come to 41,000. Is a question said that TDS has been deducted for that? No, sir. Question is actually silent. But since the threshold limit of 2,40,000 has been exceeded, are you all really with me? They would have deducted what? TDS under 194I. Look at here. He owns a commercial building. Commercial building. Commercial building. That means the person who are paying rent is a businessman. In order to claim it as an expenses in his P&L account, he is supposed to, sir, deduct TDS under section 194I. Otherwise, my dear lovable students, 30% in his hands will be disallowed. Are you all really with me? So surely he would have deducted TDS under section 194I. That's why logically 41,400 they are deducting. Superb adjustment in this question. And TDS on dividend, surely under section 194. Under section 194 for dividend, 10% TDS would have been deducted. That is 90,000. So all the TDS if you reduce means the total tax payable will be 2,52,230. Are you all really with me? A normal question with, my dear lovable students, maximum adjustments. Sir, I hope that those who have solved illustration number 1 and 2 by yourself, you'll be feeling much better with illustration number 3. Yes, sir. This is how a 14-mark question is going to be. That too will be solving last 25 years, sir, question. By that time, the level of confidence will be very level. No one can touch us, including ICI. Hello, sir. Sir, pause the video, do this sum, and we will move into illustration number 4, and we will say that 4 by 25 is our target. I am waiting here, sir, to you to complete illustration number 3. Don't listen, sit and solve. Then you will get a good flow. Yes, sir. I hope that you would have done illustration, 3 illustrations from 25 question. We are in the mission of completing 25 questions for this Jan. I'm moving into illustration number 4. And this question is an MTP April 2021 question. Deepak is a retired government officer. So mark it, government officer. Aged 65 years. That means what citizen? Residing in Hyderabad, derived following income. After retirement, you will not get salary, you will get only pension. And this pension will be taxable under the head salary. So because of you receive salary only, you are getting pension. That's why that pension will be taxable under the head what? Salary income. Interest from bank of FD. He put FD 55,000 will be taxable under IFOS. And this guy is senior citizen, is entitled to claim 80 TTB of 50,000. Comfortable? Compute the total income of Mr. Deepak for assessment year 24-25 from the following. Life insurance premium paid by check 22,500 for insurance of his life. Yes, his life is very important. The insurance policy was taken on 8/9/2028. This is after cutoff date. After cutoff date means 10% is allowed and sum assured is 2 lakh. So 2 lakh into 10% comes to 20,000 is the deduction allowable under 80C. Premium of 26,000 paid by check for health insurance of self and his spouse. Sir, this is paid by check for what insurance? It's not 80C, it is 80D. Since this guy is a senior citizen, up to 50,000 is allowed, but he paid only 26,000. To the extent of 26,000 is allowed. Comfortable? Paid interest of 6,500 on loan taken from a bank for MBA course pursued by his daughter. Daughter is form part of family. You are entitled to claim Chapter 6A deduction under 80E. A sum of 15,000 donated in cash. அப்படியே சொல்லு. Cash. To an institution approved for the purpose of 80G for promoting what planning? Sir, in excess of 2,000, you are not supposed to make the donation. So this cannot be claimed as what? Deduction. Sir, every point we know. Every adjustment we know. That's why I'm again saying that in the janda. So computation of total income of Mr. Deepak for assessment year 24-25 is the question. Income from salary, sir, 6,60,000. Nothing, no computation, no basic salary, no DA. All will be there when you are working. Once you retire, such things will not be there. Comfortable, sir? Less standard deduction under 16 subsection 1A. How much, man? 50,000. Against pension income also. Because whatever income taxable under the head, salary, the standard deduction can be claimed. Come to 6,10,000. Right, sir? Income from other sources, interest from bank on bank FD, 55,000. So your gross total income will be 6 lakh. From that gross total income, you can claim Chapter 6A deduction. Deduction under 80C LIC premium. Actually, he paid 22,500, but will be restricted to 10%. That comes to how much? 20,000. Deduction under 80D medical insurance premium paid by check. Since this guy is a senior citizen, he is entitled to claim deduction under 80D to the extent of 50,000, but don't claim 50,000, 50,000 or 26,000, whichever is. Deduction under 80E, interest on higher education from NBA course pursued by his daughter, 6,000. Deduction under 80G, donation to an approved institution for promoting what planning? Since the amount exceeding 2,000 in cash, not entitled for 80G, and 80TTB is interest on FD with bank, allowable as deduction, 50,000. Since Mr. Deepak is a what citizen? Otherwise, 80TTA would have been applicable. In this case, 80TTB will be applicable. So the total income will be 5,62,000. What they want, man, compute the total income of Mr. Deepak. You add one line there under optional tax regime. Under what? Because if question did not mention anything specific, we have to do both under the optional tax regime and also the default tax regime. Comfortable? For assessment year 24-25 from the following. So that word is missing. I am adding that word. Comfortable? Because this question has been asked in April 2021. At that time, these two routes and all not there. Only one route was there. That is optional what regime? Tax regime. There is no concept of default at all. So actually, when the same question come for our examination, we are supposed to do under two routes. One is optional tax regime and default tax regime. Like that, only a first 14 mark question they will ask. Officially, we can declare that we are through with 4 questions out of 25 question target, my dear lovable students. What you are supposed to do is, sir, pause the video, do the sum, then come to illustration number 5. You will be feeling so much comfortable with the first 15 mark. It's my personal guarantee. Comfortable? Sir, very happy morning to all. Sir, we are in the target of completing 25 question for Jan examination, computation of total income. Right, sir? In that we have done question number 1, 2, 3 and 4. My dear lovable students, that is one league or one set of question. I am moving into illustration number 5, a very important question for exam. Mr. Alok, aged 58 years, a resident Indian individual, is an advocate and furnishes you the receipts and payments account for the financial year 23-24. They have given receipts and payments account. This is one model of question which we can expect in exam. Instead of P&L account, they will give receipts and payments account. So when you get receipts and payments account, what is the approach you should take is, whatever information you need, those informations you have to take. Whatever informations are irrelevant, you have to skip that information. Like opening balance, cash and bank, 80,000. That is irrelevant for the total income computation because that is not our income. That is our asset. Fees from legal services, 49,60,000. That is our major income, which has to be taxable under PGBP. Motor car loan from SBI. This is a capital receipt, not a revenue receipt. This will not be treated as, sir, income. This is a liability actually at the rate of 12% per annum. Interest is how much lakh? 5 lakh. So you have taken a loan, motor car loan, 4 rupees how much lakh? 5 lakh. At the rate of how much percent per annum? 12% per annum. Sale receipts of 5,800 listed equity share sold on 31st March. That means you sold the shares. Hello, sir. If you sold the shares, my dear lovable students, capital gain will come. Right, sir? You sold on 31st March 2024 for 5,95,000. This is full value of consideration. This should be taken care under capital gain. And this, if required, at the required place, you have to take. And fees from legal services, you have to take it under profits and gains of business or profession. Staff salary and bonus to clerk can be claimed as deduction against the fees from legal services, because in order to earn that legal service income, I have to incur the what? Expenses. Other general and administration expense can be claimed as deduction. Office rent can be claimed as deduction. Life insurance premium cannot be claimed as deduction under PGBP, but you can claim it as deduction under 80C, provided if you are traveling through the optional tax regime. Motor car, this is not a revenue expenditure. This is a capital expenditure acquired in January 2024 by way of NEFT. So 48 subsection 3 implications will not come. And this motor car, if it is used for the business, my dear lovable students, you can claim depreciation under section 32. That too, since the asset has put to use less than 180 days, you are entitled to claim depreciation half the rate, which is 7.5%. And since the motor car is not plant and machinery, it is not entitled for additional depreciation. Books bought by way of account paycheck. We know that books, annual publications, other than annual publication, are 40% rate of depreciation. For that, we can claim 40%. Computer acquired on 1/1/2023 for professional use, payment paid by account paycheck. For this computer also, you are entitled to claim depreciation at the rate of 40%. Domestic drawings are personal expenditure, should be reduced from the capital, nothing to do with the expenses. Motor car maintenance, if the motor car is used for business, both the depreciation on motor car and motor car maintenance can be claimed as a reduction. PPF, if you are contributing to PPF, you are entitled to claim deduction under ATC. Closing balance, put it on. These are the other information given. Listed equity shares on SCT was paid, were acquired in August 2026 for rupees 1,21,800. That means listed equity shares you have acquired before the cutoff date. That is August 2016 is before cutoff date. Because for a listed share, the cutoff date is 31st of January 2018. The cutoff date is 31st of January 2000. Before this date, before 31st of Jan 2018, the shares were exempted under section 1038. On this date only, they deleted that section under section 1038 and they brought 112A. Earlier 112A was not there. On this particular date only, 112A has been introduced. For 1,21,800. Fair market value of such share as on 31st January 2018 and on April 2018 were 75 per share and 85 per share respectively. We don't have nothing to do with, my dear lovable students, fair market value as on 1st April 2018. You have to see the fair market value on the cutoff date. Cutoff date is 31st January 2018. So you have to take the fair market value, which is how much per share? 75 per share. Now motor car was put to use for both official and what purpose? Personal purpose. So there is motor car which has been used for both. 1/3 of the motor car is for what purpose? Personal purpose. That means section 38 will be applicable. Asset used for both business and personal. So 1/3 should be disallowed and 2/3 should be allowed. No interest on car loan was paid during the previous year 23-24. Sir, you have not paid the interest on car loan at all. If you don't pay interest on car loan, sir, 36 subsection 1 clause 3 interest on borrowed capital will be allowed as deduction on actual payment basis only. Section 43B will have restriction. So it cannot be claimed as a deduction. Mr. Alok purchased a flat in Kanpur for how much lakh? 35 lakh in July 2016. Cost of which was partly financed by loan from Punjab National Housing Finance Limited for how much lakh? 25 lakh. His own savings how much lakh? 1 lakh. And deposit from Repco Bank for how much lakh? 9 lakh. The flat was given to Repco Bank on lease for 10 years at 35,000 per month. So this will be taxable under income from house property because 35,000 rupees monthly rent is coming. Following particulars are relevant. Municipal tax paid by Alok 8,200 per annum can be claimed as deduction under LT/MT paid by the owner. House insurance, put it on dustbin. For that only they are giving ad hoc deduction of 30%. As per interest certificate issued by Punjab National Finance Limited for the financial year 23-24, he paid 1,80,000 towards principal. If you pay principal, you can claim deduction under 80C, and 2,01,500 as interest. This can be claimed as deduction under 24B. Since this is let out property, there is no restriction for the amount of the interest. You can claim it as unlimited, comfortable. He earned 1,20,000 in share speculation business. So from speculation business, he is having income, and lost 1,80,000 in commodity speculation business. So from the speculation business, he is having one income, and from speculation, sir, business is having one loss. You can knock off. Mr. Alok received a gift of 21,000 each from 4 of his family members. So 21,000 into 4, which will be some amount, which is more than 50,000. It will be taxable under the head IFOS under section 56 subsection 2 class 10. He contributed 1,21,000 to PM Care Fund by way of bank draft. You are entitled to claim deduction under 80G, that to 100%. Because it is a category A investment. He donated to a registered political party 3,50,000 by way of check. So it is entitled to claim deduction under 80. He follow cash system of accounting. If you follow cash system of accounting, sir, whatever expense paid can only be claimed as deduction. Whatever income received will form part of income. Cost inflation index for, sir, capital gain calculation has been given. You are required to compute the total income and tax liability of Mr. Alok. So you have to calculate the total income and also the, assuming Mr. Alok is not willing to opt for the provisions of 115BAC. That means he is going to travel through the optional tax regime under what? What is the question? EMTP, sir, 21 and May 2019. A brilliant, super, fantastic question. Good level of question for examination. Are you all really with me? I'm start discussing one by one, man. Always when you are writing answer total income question, computation of total income for Mr. Alok for assessment year 24-25. In this question, is there any salary income details given? No, sir. No salary. Why, sir? What is the logic? Because he's doing business. Generally, a person who are doing business will not have salary income. Generally, a salaried person will not have business income. Generally, sir, exceptions will be there. Coming to income from house property, man. I'm going to calculate income from house property. Sir, throw the data to me. Number 1, gross annual value. Sir, you are having one building which has been given to lease to a bank, right, sir? What is a monthly rent? So 35,000 into 12 comes to 4,20,000. That we are taking as gross annual value in the absence of the other information. Otherwise, we will take that fair rent or municipal value, whichever is higher. Whichever is higher or standard rent, whichever is lower, that answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. Hello? Less local tax or municipal tax paid by the owner? Yes, it is given in the question. What is the local tax or municipal tax paid? 8,200. So from 4,20,000, if you reduce 8,200, the net annual value will be 4,11,800. Into 30% it's standard deduction, 1,23,540. Right, sir? Below that question itself, they specifically said that the interest on borrowed capital, my dear lovable students, is, sir, they paid, sir, 1,80,000 towards principal and 2,01,500 as interest. Sir, 2,01,500, you can claim it as deduction under 24B. Students will make a mistake here. What mistake? Sometimes they may restrict to 2 lakh. That restriction will be applicable only to the self-occupied property, not to the let-out property. So from 4,11,800 NAV, if you reduce 1,23,540 and if you reduce 2,01,500, you will get 86,760 as income from. That's it, man. The first head I have finalized 86,760. Are you 100% comfortable? Going to the very important head called as profits and gains of business or profession, going to work out the PGBP income. Be with me. Sir, this is not P&L account. If it is P&L account, I will do like this. I will take the net profit as per P&L account. Whatever unnecessary item debited in P&L account, I will add back. Whatever unnecessary income credited to P&L account, I will reduce. But this is not P&L format question. This is receipts and payment question. So in case of receipts and payment, I have to manually do that like our direct method and indirect method in the cash flow statement. Nothing more, nothing less. Are you really with me? Sir, if it is direct method, I have to pick the direct cash flows and put it under cash flow from operating activity, cash flow from financing activity, and cash flow from investing activity. The same way, here, what are the required details under PGBP has to be parked under PGBP. That's it. My dear lovable students, fees from legal services, what is the income? 49,60,000, which is there in the debit side of the receipt side of the receipts and payments account. Comfortable? Yes, sir. Less expenses allowable as deduction. All the expenses, by looking into the payment side, manually we have to reduce. Number one, staff salary and bonus. You have to tell me. 17,50,000. Other general and administration expense, 22 lakh. Office rent, 1,48,000. Motor car maintenance, actually how much you spend? Totally how much you spend? 72,000. In that section 38 will be applicable, right, sir? 1/3 has been used for personal use. That means only 2/3 has been used for official use. So 72,000 into 2 by 3 comes to 48,000 after you have, sir, applied section 38. That is asset used for both what and what. If any asset has been used for both business and personal, my dear lovable students, only to the extent of the business expenditure will be allowed as a deduction. Personal part will not be allowed as a deduction. So 1/3 I have put it on dustbin. Car loan, interest not allowable. You know why? Since Mr. Alok follows what system? And no interest is paid during the financial year. Since he's following cash system, sir, I can't allow, sir, interest is payable. So I can't claim that as what? Deduction. Comfortable? Coming to the exclusive deduction under section 32. Depreciation, nothing but I'm going to reduce depreciation for one by one item. First one is what? Motor car. You tell me what is the value of the motor car given in the question? 9,50,000. What is the rate of depreciation? 15%. That means 1,42,500 for 1 year. Have you put to use that motor car for more than 180 days? No, sir. So into 50% comes to 71,250. Right, sir? Have you used that motor car 100% for business? No, sir. 1/3 is for personal. So only 2/3 is for. So into 2 by 3 comes to, sir, 47,500 is the eligible depreciation under section 32. Getting it? Being, sir, books being what publication? Annual publication. Tell me what is the cost of the books? 80,000. Into what is the rate? 40%. You tell me, sir, have they given the date of purchase of the books in the question? No, sir. They said that annual publication, right, sir? We are assuming that it has been purchased before more than 180 days. So entire 40% is eligible, entire 32,000. Are you all really with me? Computer also you are entitled to claim depreciation under section 32 at the rate of how much percent? 40%. What is the value of the computer? 52,000. 52,000 into, have you, sir, used that computer for more than 180 days? No, sir. So into 50%. Come to 20. 52,000 into 40%. Into 50%. Come to 10,000. Let me ask you a question. Is there applicability of section 38 for the computer? No, sir. Because computer has been fully used for business. Only motor car has been partly used for business and partly for personal. Getting it? So my dear lovable students, the total PGBP, profits and gains of business or profession, is 7,24,400. 7,24,100 is the PGBP income. Are you able to understand everything? I have done with the salary, house property and PGBP. And I am coming to capital gain, man. Capital gain, you are having a very good takeaway in this question. Good takeaway. Sir, those who have not studied this provision earlier, you can, sir. And PGBP, actually one more business is there, no? Sir, income from share speculation business, right? That also we will finalize. Income from share speculation business is how much? 1,20,000. That is income. You are having one loss. That is loss from commodity speculation business set off against income from share speculation business, because we all know that set off and carry forward provision. Loss from speculation business can be set off only against profit from. So, how much is the loss totally? 1,80,000. You can knock off how much? 1,20,000. So, balance loss of 60,000 to be what forward? To assessment year 25-26 as per section 73, and can be carried forward up to how many assessment year? So, the income from speculation business will be 0. So, you will be having carry forward of speculation business loss. Shall I proceed? Very important computation of capital gain, man. You are having a big lesson and big takeaway. Sir, that's what I said, man. Sir, earlier listed shares were exempted under section 10 subsection 38. Over a period of time, government thought that why we have to give exemption for the listed share? We will tax it. They deleted 10 subsection 38. Then only they introduced 112A. Understanding? So, my dear lovable students, computation of capital gain, LTCG on sale of 5,800 listed share. So, they were having 5,800 listed share. Go and see the receipt side of the receipts and payments account. How much rupees you realized? 5,85,000. 5 lakh. That is the full value of consideration. So, full value of consideration is 5,95,000. Comfortable? Less what of acquisition? Because this is a super asset. For super asset, proviso 3 will be applicable. Proviso 3 is saying that proviso 1 and proviso 2 will not be applicable. That is, benefit of indexation will not be, and foreign currency calculation will not be. Anyway, that foreign currency calculation is applicable only to a non-resident. No need to scratch our head. That is as per proviso number 1. Comfortable? Whereas proviso number 2 is applicable to both resident and non-resident. Even though the super assets are long-term capital asset, my dear lovable students, you are not entitled to take the benefit of indexation. That's why instead of reducing indexed cost of acquisition, I am reducing the cost of acquisition. Getting it? My dear lovable students, there is a cutoff date. You know, I already told that, sir, just now, what is the cutoff date? I told 31st Jan 2018. Or you can call it as 1/2/2018, also 1st of February, whatever it may be. In certain question, they will give 31st Jan or 2018. I will tell you one thing, clearly understand the logic. If you purchase a listed share before this date, before this particular date, sir, actually when you have invested, government said that when you get the long-term capital gain, it is exempted under section 10 subsection what? 38. By saying this only you invested in the shares. But suddenly government's mind changed. So what government said that, sir, once you are selling that capital asset after 31/1, we will become taxable. People started asking that, what is this? This is pakka cheating. Because at the time of investing, government said that it is exempted. That's why I invested 10 crore, 20 crore, 50 crore. And now when I am earning income, government is saying that it is what? Taxable. So government said that, okay, fine. We understood. And sir, there is mistake in our side only. There is no mistake in the investor side. So we will do one thing. Assume when you invested, before the cutoff date you invested. What is the cutoff date? 31/1/2018. Sir, when you invested, actually you would have paid the cost of acquisition. Getting it? And sir, if you have sold before this date itself, that means if you achieve full value of consideration before the cutoff date itself, it would have been fully exempted under section 10 subsection 38. Getting it? But you purchased before the what year? Cutoff date, and still you are holding. That means if you are selling in future, as per the amendment, dash gain will come, capital gain will come. But we are having a cutoff date. This cutoff date is what? 31/1/2018. If you are selling on this date, on this cutoff date, if you are selling on 31/1/2018, you will be earning full value of consideration. You will be earning, right, sir, less expenses for transfer, put a dash. So you will be getting what consideration? Net consideration. Less N of acquisition. This cost of acquisition will be either the full value of consideration. Either that is for how much price you have sold. Hello, sir. Either the what value of consideration, or sir, the fair market value as on 31/1/2018, whichever is lower. Whichever is what? Either sir, the full value of consideration or the fair market value as on 31/1/2018, whichever is what? Lower. So you'll be getting some answer, right, sir? The whichever is lower or actual cost of acquisition. You would have really paid something when you are acquiring the share before the cutoff date, right, sir? Whichever is higher. Whichever is what? So what government said that, sir, now you are selling. Hello? On the cutoff date. If you are selling on the cutoff date, you will sell for what market value? Fair market value. You will sell for that fair market value. 99.99% that fair market value will be equal to full value of consideration, and full value of consideration will be equal to fair market value. Because if you are selling on the cutoff date, you can sell only as per the what market value? Fair market value. So that NSR, you have to take, for example, the full value of consideration or the fair market value as on cutoff date, whichever is lower. That whichever is lower or actual cost of acquisition before the cutoff date, whichever is. So technically what cost of acquisition will be coming is full value of consideration. Technically the cost of acquisition will be what value of consideration? Then automatically the capital gain will be what? 0. Then even though 10 subsection 38 has been deleted, they have given effect to the exempted section by way of the what of acquisition, cost of acquisition. But there are certain people, even after this cutoff date, they hold the shares. They will sell the shares during our financial year. What is our financial year? 23-24. Are you all really with me? If they sell on 23-24, the fair market value would have grown. Because, sir, if you have sold on the cutoff date, you would have got one fair market value. But you hold at the share and it would have grown. Hello, sir. Then this fair market value will be the what value of consideration? Full value of consideration. Getting it? And this fair market value, you can take it as cost of acquisition. This difference growth, you have to mandatorily pay as what gain. Because you know on the cutoff date that the shares become taxable. If you don't like it, you could have sold it. If you have sold it, then this fair market value you would have allowed as the what of acquisition? Cost of acquisition. And the capital gain would have been what? 0. So even after the cutoff date, if you are holding the share, means you intentionally hold it by knowing the provision, then there is no cheating from the part of the what? Government. For that extra growth, you are mandatory liable to pay what gain. So my dear lovable students, look at here. Sir, what has happened? Sir, how many listed shares you have purchased? 5,800. Sir, for how much rupees you have sold? Total value, how much rupees you sold? 5,95,000. 5,90,000. Okay, now I am calculating the what of acquisition, cost of acquisition. You tell me, is this share purchased before cutoff or after cutoff? Before cutoff. Before cutoff. If it is before cutoff, and have you sold on cutoff, after cutoff? After cutoff. That means there should be dash gain, capital gain, for the extra growth from the date of cutoff till the date of sale. Concept clear? Sir, my dear lovable students, the dash of acquisition, cost of acquisition is equal to what value of consideration? Full value of consideration or fair market value as on date of cutoff, whichever is lower. What is the full value of consideration? 5,95,000. Or what is the fair market value as on date of cutoff given in the question? How much? 75 into 5,800 shares comes to 4,35,000. So whichever is lower comes to 4 lakh. Sir, if I take whichever is higher, my dear lovable students, I am taking the fair market value or as on date of sale. That is not allowed. Because the fair market value from the date of cutoff till the date of sale, we want capital gain. If that is the case, you can take maximum fair market value on the date of cutoff as the cost of acquisition. That's why what value of consideration? Full value of consideration or fair market value as on date of cutoff, whichever is lower, which is how much? 4,35,000. Sometimes you may argue to me that, sir, I paid 5 lakh when I purchased the capital asset, but you are asking me to take only how much? Nyayama, it is anyayam. That's why government is saying that whichever is lower or actual cost of acquisition, whichever is higher. What is the actual cost of acquisition? 1,21,800. 800. You tell me 4,35,000 or 1,21,800, whichever is higher. That's why you are taking 4,35,000. Are you all really with me? If you sold this asset on the date of amendment, the full value of consideration would have also 4,35,000. Hello? And the cost of acquisition will be 4,35,000. Automatically the capital gain would have been zero, as if you are claiming section 1038 exemption. But since you have holded that capital asset, even after the cutoff date amendment, it has grown to 5,95,000. Are you really with me? For this growth is not an unknown growth. This is a known growth. For this, we want long-term capital gain tax. Are you really with me? So the long-term capital gain will be 1,60,000. That's what they have attached here as 1,60,000 long-term capital gain. Are you comfortable with the capital gain adjustment? This is a beautiful takeaway from this question, man. This is any listed shares if you have acquired before the cutoff date. Cutoff doesn't mean 1/4/2001. For the listed shares, the cutoff is 31/1/2018. Are you all really with me? Sir, if you have acquired before the base year, my dear lovable students, before the cutoff date, my dear lovable students, then full value of consideration or fair market value as on date of cutoff, whichever is lower. Whichever is lower, or actual cost of acquisition, whichever is. I hope that you are comfortable. Salary done, house property done, PGBP done, capital gain done, and I'm moving into IFOS, a very easy part, my dear lovable students. IFOS, very easy part. Everything has been given in the question. Sir, computation of income from other sources. Cash gift of 84,000. Because he received 21,000 from how many people? 4 people. Received from his cash gift exceeds how much? 4 friends is taxable under 56 subsection 2 class 10, since the aggregate amount of cash received during a previous year exceed rupees. So 84,000 is taxable. So 84,000 will be taxable under income from other sources. So we have done with the salary, house property, PGBP, capital gain, and IFOS. If you add everything, you will get the gross total income of 10,54,860. Shall we reduce the chapter 6A deduction? Every chapter 6A, sir, has been given in the question. I'm going to just add it, chapter 6A deduction. Sir, deduction under ATC. Life insurance premium under what section? ATC. How much rupees? 49,000. Repayment of housing loan. Sir, interest can be claimed as deduction under 24B. Principal can be claimed as deduction under ATC to the extent of 1,80,000. PPF subscription can be claimed as deduction under 1,50,000. Right, sir? But maximum under ATC will be allowed 1,50,000 under ATCCE. Under ATCCE. Because ATCCE, that is a ending section. It ends with 1,50,000. Are you all really with me? Shall I proceed, sir? Deduction under ATG. Contribution to PM Care Fund. Sir, you contributed 1,21,000. It is a category A investment. 100% deduction without qualifying limit. So you are entitled to claim 1,21,000 rupees as deduction. Deduction under 80GGC. You have contributed to a registered political party, not local political party. Made by way of check. You are entitled to claim 80G, and total deduction will be 6,21,000 irrespective of the cap. Irrespective of the cap. So 6,21,000 is the chapter 6A you are entitled to claim. So you will get the taxable income as 4,33,860. Comfortable? This is less than 5 lakh and not more than 50 lakh. Surcharge will not be applicable. Rebate under 87A will be applicable. Immediately you have to capture this in your brain. Comfortable? So computation of tax liability of Mr. Alok for assessment year 24-25. I will check whether he is having any special income like casual income. No. Is having any long-term capital gain? Yes. That long-term capital gain is covered under 112A because asset is a what asset? Super asset. In excess of 1 lakh, it will be taxable at 10%. What is a long-term capital gain you got? 1,60,000. So in excess of 1 lakh is 60,000. So 60,000 to 10% come to 6,000. Brilliant, sir. So 4,33,000 what? 60. 860. Classified into 2 categories, right, sir? The number 1 is long-term capital gain covered under 112A and other income. What is a long-term capital gain covered under 112A? 1,60,000. So 4,33,800 minus 1,60,000 comes to 2,73,800 is the other income. Can I claim the basic exemption limit? Yes. To the extent of 2,50,000. Why 250? Basic exemption limit. Under the what route? Optional tax regime. What is his age? 50? That's why 2,50,000. Otherwise, I would have applied 3 lakh. 5 lakh. Right, sir? Fantastic to the core. So 2,73,800 minus 2,50,000 comes to 23,800 is a taxable income. Into how much percent? 5% comes to 1,190. 1,190. 93, yeah? Sir, it will be round off, no? 4,33,860 minus 1,60,000. You are getting into 2,73,860. Okay, fine. Minus 2,50,000 comes to 23,860 into 5%. 1193 is the right answer. Comfortable, sir? My dear lovable students, since the assessee is a resident, since assessee's total income is less than 5 lakh, is entitled to claim rebate under 87A. The rebate amount will be statutory limit of 12,500 or the tax payable, whichever is lower. Comfortable? But very important thing, very important thing, very important for exam. 87A rebate is not available for 112A. 87A rebate is not available for. That means against this 6,000, you can't claim 87A rebate because this is taxing only in excess of how much lakh? 1 lakh. That at a concessional rate of 10%. Again, if you claim 87A, what government will have? So government said that we will not give 87A rebate for 112A. Sir, 112A, what A? 87A. ரெண்டு பேருக்கு ஆவாது. Are you all really with me? ரெண்டு பேருக்கு ஆவாது. 112A, sir, against 112A tax payable, you can't claim 87A. Comfortable, sir? Fantastic, man. So less rebate under 87A. Since the total income does not exceed 5 lakh, rebate under 87 is not available on tax on long-term capital gain taxable under 112A. So this amount I can claim it as 87A. But balance tax payable will be how much? 6,000. 6,000 into, sir, 104% comes to 6,240 is the total tax liability is supposed to be paid. What a brilliant question. What I loved in this question, my dear lovable students, they were having one beautiful note. This linking, I love you ICI. This linking, I love you ICI. Because what is a job he is doing? Profession. He is a notified profession. Like law, medicine, accountancy, architecture, interior decorators, technical consultancy, authorized representative, film artist, IT professional, engineer, company secretary, or any other person as may be notified by the board. If you are 12 notified professional, sir, provisions of section 44 ADA will be applicable if the turnover does not exceed 50 lakh. If you are a normal person, or as per the amendment 75 lakh, if you are within 5% category. Then, my dear lovable students, you have to declare 50% of the gross receipts as the total income. That's what for the previous year 23-24. The gross receipts of Mr. Alok is 49,60,000. That's what. It is less than what? 50 lakhs. 49,60,000. Since it does not exceed how much lakh? 50 lakh is eligible to opt for presumptive taxation scheme under 44 ADA. In such case, this professional income will be 24,80,000 being 50% of 49 lakh what? 60,000. It is more beneficial for Mr. Alok to declare profit of 7,24,100 as per the books of accounts, which is lower than the profit computed on presumptive basis under 44. Are you all really with me? My dear lovable students, if you are calculating the presumptive income as per 44, it's come to how much? 24,80,000. But sir, if you are calculating under the books of accounts route, it is only 7,24,000, which is better. That means you are an eligible assessee to declare income under presumptive income. But you are not declaring 50%, then you have to face the consequences. The consequences are you are compulsory liable to maintain books of accounts under section 44AA, and you are compulsory liable to do tax audit under section 44AB. That is the next line. However, for declaring lower profit, yes, to maintain books of accounts under 44A and get the same auditor under 44AB. What a clarity. Are you all really with me? Everything is able to be appreciated, man. One of the beautiful question available, man. Fantastic question. Now, if you solve this question, understand this question, then, sir, the first question, 15-mark question, computation of total income will be a jujubi jilebi. Hello, sir. Sir, understand this question, and I will again tell you those who are hearing my class. Sir, hearing my class is not sufficient. You have to pause the video. You have to solve by yourself. I am just a guide or bridge to explain if you are having any doubt when you are doing computation of total income. Comfortable? So many good takeaways. Man, pause the video. Do this for 15 minutes and come back. Today itself, I will be solving one more question, which is illustration number 6.